Let me welcome in Taher Badshah, who's with us. Taher is Chief Investment Officer at Invesco Mutual Fund. Taher, good morning. Great to have you with us here. You know, we've spent the last hour or so talking about the what we broke yesterday in terms of the story, specific proposal from the government to the GST Council on what the centre would like to see. Of course, the GST Council has to decide. What to your mind, Taher, from a GST perspective, which sector, I'm sure you discussed this internally, what's your thought process? Where will this show up the most meaningfully? And distill it down to sectors from a stock market point of view. Taher.
Yeah, Prashant, so I think it's quite obvious, and there's been a lot already discussed around this, and we know that essentially the slabs which are merging, which is basically the 28% and the 12%. Those are the ones which are actually going to see the maximum amount of benefit. And by and large, I think what has been conveyed and also been supported by the council is that most of the items in these two categories will move into the other two. So I think by and large, it is more or less determined by that some of those products which are in these two categories, basically the 28% and the 12% will be the largest beneficiaries. And I think if you distill it down product-wise, the obvious gainers are basically in the two-wheeler and in the auto space in general, particularly as far as two-wheelers and some of the four-wheelers also are concerned. Especially at the entry level or the value segment of the market. Those will be obvious beneficiaries. There will be also, some of the staple products which will also benefit. Although many of these did happen to be in the 5% category. So there will be a relatively lesser number of products which will probably be beneficiaries. But these are the two main, segments of the market which should gain as a result of this.
Got that. And as we speak, these are the segments of the market which are doing extremely well as well. The top three gainers right now, as I see, are HUL, Asian Paints and ITC. Britannia thrown in there as well. Obviously not a part of the Nifty anymore. Tata Consumers, the other one, which is higher. So the top sectoral gainer is the Nifty FMCG, which is currently at the high point of trade. Taher, ever since the budget announcement, the street was expecting a shift from capex to consumption. Do you think that was investable then and is investable now as well, or do you believe that money will be made only as of now in the capex plays, given the sort of problems that overall consumption, especially at the staples end, is facing right now, and the valuations at which these stocks are trading?
So Mangalam, when the first benefits were announced as far as taxation were concerned in the budget, that was essentially a bit of a starting point as far as a move towards consumption is concerned. It did not really happen at the expense of industrials to a large degree. It did for a while, especially during the time when we had that bit of the slowdown shock, and that the public spending was a little weak as well. But I think since then, since let's say the start of this fiscal year at least, we've seen even the industrial segment do reasonably well, thanks to the fact that even the government spending has held up pretty well during this period. But now that we are, we have this big, reasonably big boost coming on account of GST. There are still a little bit of question marks as far as the funding is concerned, and to that extent, it needs to be seen as to whether the government has enough levers in the budget to be able to kind of support both the segments. I would like to think that at this stage, it should be possible for the government to support consumption as well, without actually deviating significantly from the fiscal path, especially if we were to probably avoid the tariff-related hit. I think if that were to probably also compound as it looks like as we stand today, then probably things get a little tougher, and we'll have to see as to where the government's priorities lie, whether they have other avenues to be able to kind of make up for the shortfall and support both the segments so as to make it a twin-track economy.
Okay. Got that point. By the way, I'm just looking at the fall on Mahindra & Mahindra. Stocks down about 3%. There is no fresh news as such. And this could be a complete off-tangential shoot, but let's not forget that there are very, very big political meetings coming up over the weekend, the SCO summit and Prime Minister Modi's bilateral meeting with his Chinese counterpart as well. And a lot of thoughts have been tossed and thrown up in the air, including the possibility of opening up to more Chinese investment I mean, could something like BUID be making in India as well? Again, this is all conjuncture at this point in time till we have anything definitive from those meetings. But perhaps that could be at the margin, something that is kind of in people's mind this morning. M&M down about 3%. Taher, hi, morning. And actually, let me toss that to you. Maybe it's a question slightly ahead of time. But it's very, very clear that while our trade relationship with the US has gone into a cold storage, there is clear momentum and clear effort to revive a trade and business relationship with China. Now, do you see any implications, even at a broader level, at a surface level right now, for the listed ecosystem, whether it's our electronics companies, Amber and Dixons of the world, whether it's automakers? How should one start thinking about this? Because the shift seems to be in the making.
Yeah, it looks like clearly, and obviously it is born out of some of the circumstances which are surrounding geopolitical environment today. And I think at one level it is perhaps a bit of a shift in our own policy as well. And I think over a longer term it should hold up well. It should probably take away some of the shadows which surround Chinese investments and ability to probably have bilateral trade at a more meaningful level. It also probably lifts a little bit of the constraints from a few of the industries, some of the manufacturing-oriented industries, in order to be able to source raw materials and so on, so components, etc., as you mentioned. So I think it will free up some of the the supply chains which otherwise could have probably impacted India even more. I think we know that there are we probably are at this stage likely to see two supply chains develop around the world. They're already developing around the world, essentially. One is a US supply chain and the one which is centered around China. And I think we'll probably have to see as to how we want to align ourselves. We've been significantly aligned on one side, and maybe we want to there are some of these overtures that we are making in order to make sure that we are part of both the supply chains, at least for the foreseeable future. So I think diplomatically, it is a good move, in my view.
Taher, absolutely, completely agree. But is there a risk of Chinese products undercutting Indian products? I mean, what's worked in many sectors, and these are high P multiple sectors, right, is import substitution. And if we are going to get stuff from China, they're going to get stuff from us. And I guess the market access here is a big one. Any thoughts?
I would think that, there are much of what we actually import out of China is essentially more of the raw materials, intermediates, certain components, etc. And that, I think, should not necessarily hurt us in terms of, it affecting some of our local manufacturers, at least some of the finished goods product manufacturers. And in certain areas, we also have reasonable safeguard duties in order to ensure that, pricing is not hit in the local market. So we'll have to see how that goes. But it's at this stage, Prashant, as you know, it is very incremental. We are seeing defreezing happen in things like ability of Chinese professionals, Chinese nationals to be able to access India, to come to India, to be able to support some of the local manufacturers and so on. So that is the level of thawing of relations. We'll have to probably see how that further develops. But I don't fear that as much at this stage.
Right, we take that point. Taher, in as many words as you can say without spelling out individual stocks, I have to ask you about Ola Electric. That definitely has been the stock of the month, up around 38%. The reason why I say that is because, one, from a government standpoint, there is the push that is coming in on two-wheelers and two-wheeler ownership. And the second part is the push that is coming in on electric vehicles as well. Add to all of this, the underlying fundamentals of the company, at least from what we saw in the first quarter results, seem to have been improving, along with the additional benefits that they get from PLI as well. Now, this is a high-risk bet. The stock has already seen a correction. Despite the rally that we've seen of 38% this month, the stock is still half from its 52-week high. How would you approach a space like this, which is fraught with risks, but, has seen such big moves?
So I think there are a couple of players which are, investment opportunities which are there in this space. And while we may not necessarily, as a matter of disclosure, have any exposure to Ola Electric in our portfolios, but we, again, as a matter of disclosure, we do have, exposure to, let's say, something like Ether. Ather Energy in our portfolio. So I think by and large we just to convey the point that we are optimistic about this space, and there will be players whom we'll back depending upon where do we see the strategy to be well placed, and the growth opportunity is still there in our view. So I think there's one segment which has held up reasonably well in the market for much of the players, even over the last some time, despite the fact that there's not really a big push as far as any other incentive is concerned. Of course, the government is now once again a little more amenable towards the segment, but otherwise it is having its own momentum simply because it is now trying to gain a larger part of the market share in the two-wheeler space.
That's on the EV side, Taher. What about overall renewables and solar? Because there's a big fierce debate out there, right? And we've got a new listing that's just happened, and then there are companies like Wari, etc. And the debate is whether this is going to be only a short-term story till there is just overcapacity in our market. Of course, the companies say that they have a long runway of growth, but what do you believe in?
So I think it will be a typical scenario where we will probably see a burst of growth for the first 4-5 years, maybe the first 5-7 years, perhaps if not more, and then probably the growth will kind of maybe level out and trend more towards averages. So I think it's a typical scenario of businesses which are in the early stages of the growth cycle, and those will be there will be obvious beneficiaries. But I think these are also segments which have got other complications, especially with regard to imports, and and in that regard, we also know that some of these stocks have done well recently, simply because of the fact that we have moved closer to China, and once again that dynamic is at play out here in the very short run. But I think we are taking it step by step. We think that many of these companies, especially in the renewable space, both the product manufacturers as well as the EPC companies are in for that benefit of that very strong burst of growth in the next few years, and then obviously we take it from there.
Right.
Okay, all right.
Taher, thank you very much for joining us. Good speaking to you.